Okay, good morning, everyone. This is pitching to an investor panel discussion. My name is Matt Warmoth. I'm with Collide Village, and we are an Addison-based business incubator. We reside at Addison Treehouse, which is just up the street. If you haven't been there, please stop by later. So just as a little bit of background on me, so I've been on both sides sort of the aisle. I have been an investor in many startups, plus my own. I have also raised capital for more than one startup of mine, plus a fund. So for the last 6 or so years, this is sort of all I've done is either raise money or invest money and kind of play investor or play startup person for a while. Anyway, so that's why I'm here. I'll let our two panelists introduce themselves. We have Paige Addison and Stephen Ellis, and I'll let y'all go ahead and say why you're here.
Sure, thanks. Good morning, I'm Paige Addison, and I also have a dual role. I am a serial entrepreneur and have raised money and done the dog and pony show for friends and family money and venture capital money back about 20 years ago. I have a marketing and branding firm now, and that is about 18 years old, and we work with small businesses from startup all the way through about $100 million. I'm here today in a little bit different capacity. One of my other passions is angel investing, and I serve on the board of the North Texas Angel Network. And in that organization, we evaluate probably 20 companies a month will come through the process to apply with their business plans to present to our group of accredited individual investors. And then from there, it spins into about 4 to 5 companies that present to our membership in a bit of a Shark Tank format, if you will. They get up and speak in front of the organization, and then the individual investors can have discussions with those entrepreneurs. So I'm here in both capacities, having raised money and now being an angel and helping companies fund their dreams.
My name is Stephen Ellis. So similar to Matt and Paige, I've existed in a hybrid role. So I haven't done any investing in startups, but I've done a lot of startup support where you're doing research to figure out what the investment community looks like, what the market for investment looks like, what prospective thesis for certain funds would match the service for the startup that you're trying to build, and then doing technology support and a lot of advising around bootstrapping. So like on the knife edge of there is zero money and you may not have any friends and family. So how exactly do you get to the place where you have something that you can pitch?
Okay, so let me just take a step back and describe kind of the scenario of what we're talking about here. So there are multiple stages kind of for investment. And so one of those is friends and family. And I think there's another group over there that's talking about sort of the friends and family role. Then you get sort of to a seed stage, which is maybe a little bit more professional, and then you go into Series A, B, et cetera. And so those are primarily at the stage of where your company is, not the stage or the amount of money that you're raising. Friends and family, the earliest stage, you have an idea, you need a little bit of money, maybe angel investment, which would be sort of at a seed stage typically. You're not raising a large amount of capital, that's a few $100,000 or something like that. Could be maybe up to $1 million. There you probably have a product, or at least you have an MVP. You're a little bit further along, maybe you have traction, maybe you have some revenue, you have a team that's maybe being built, and so you're moving along. Once you get to Series A, you should have a reasonable amount of revenue, which is always in the eye of the beholder. But that probably means that you're doing something like $50,000 to $150,000 a month in recurring revenue, or you're doing sort of $1 million runway, however you sort of get there in your type of business. That's where you get sort of to where you're really like Series A, and that's where you can raise $1 million plus. Unless you're really a special person, you're a serial entrepreneur, you've had multiple exits in the billions of dollars, then you can go ask for whatever you want, whatever stage you want. But if you're not that, if you're sort of the rest of us folks, it's going to be a lot more restrictive about how you do it. So basically, at least to get to sort of the angel stage, where you might be talking about to these people, or where you're going to raise several $100,000, which is really going to be to build your product or to give you enough, runway which is sort of how much cash you have to get down the road 6 months or longer. Maybe that's 12 months, depending on really what stage you're at. You really do have to have a product sort of available to sort of just show people. An idea on the back of a napkin probably isn't gonna cut it, because there are a lot of those out there, and people will ask for money at that point, but they're not gonna really be able to get there. So you really need to have a product. Ideally, you have a team that's gonna work too, so that's you and somebody else. If you're a technical person, you probably need somebody that has good business sense. And if you're a business person, you probably need somebody who's on the technical side, depending on what kind of company you're attempting to build.
Right.
And just so, not every business or type of business is necessarily investable. And if you do watch Shark Tank or one of those other things, they will say, I don't think your business is sort of really at an investable stage, or it's not really investable because the return size and the return time frame is not going to be what somebody who's really wants the money to work for them is really looking for. Doesn't mean there's anything wrong with your business, or that you can't still make a lot of money doing whatever that is, or that you can't grow it to be something really large. It just means that there's other things about it that sort of make it not particularly investable. So, and then just sort of the goal of pitching here. So for me, I think it's to get to the next meeting. You probably won't get something out of your first meeting that you see, investor, if you pitch to them. You really just want to get further down the road, because you're only going to have somewhere between 6 and 12 minutes, maybe, to do a pitch. I mean, it's a pretty short time frame. Let's just get a little bit further into sort of how the mechanics of what pitching to an investor really is like. And so one of the questions sort of we kind of talked just a little bit through email from it. So really, how important is a deck? And so that's a set of slides that you're going to either go over with somebody or you're going to send to somebody. So Paige, you want to start? So how important is like a deck to you?
Sure. Absolutely. The deck itself is important. What I say is the most important is your message. What are you putting on the deck? Do you have the right elements that are there? Obviously, this is a more sophisticated area now, and you can search online and get samples of great decks that are out there. And I would say if you haven't done that, that's a first starting point. So there's PitchBook that's out there. Vela Wood is one of the law firms that does a lot of work with startups. They have a wealth of knowledge there. There's even a business plan portal that you can go out to use, but the deck's important. I think the most important thing you're going to look at in your deck is it's the rules of a good presenter. So, it needs to be 5 to 10 slides, no more than that, not 10-point type font, and you're not reading your deck. Your deck is to support you and help you tell your story. But it's got to be at the seed level and the angel level. We're investing in you and the potential that you have. So you have got to be charismatic in how you present the passion, what the market opportunity is. There are certain slides you're going to have. So here's what is our product and service we're going to offer, and what need does it fill? Great. What's the market value of that, the opportunity that we have that we think we can go after reasonably? Who's the competition that's out there? You're going to have competition. If you tell me nobody, you're not going to make it very far. You're going to have some type of competition. Who's on your team? That's a huge piece. And at an angel side, when you're just starting, they don't have to be full-time. They're not going to be full-time. But at least you've identified the people that are there. Maybe it's external partners that when you get the funds, you're going to hire a technologist to help you build out your idea. Maybe it's that you've got a lawyer on board that can be part of your advisors to help you. We'll look at the advisors. Who do you know and who have you reached out to? Your role is important. How did you come up with the idea? Is it patentable? Is there any trade secret there that's going to help you have some kind of validity to it that you can talk about? Absolutely, if you've got a demo or a prototype that's a product and you can bring it and show it and hand it around, and I can see this neat bolt that no one has used before for airplane mechanics, one that we just saw a couple months ago. That's great. We had a company that came and presented that does hail protection for cars, and it is literally a balloon that goes over your car in hailstorms. And they've got them out there, and he was trying to actually recapitalize his business. And so in the parking lot, he had one set up. So what can you do visually to help us show? Is it a demo that you can show? You can incorporate a demo in your pitch deck. The biggest plan for a pitch is going to come up with, how much money do you want? And what are you gonna do with that money that comes into it? How are you gonna use the proceeds? How far is it gonna get you? One of the big risks we see is people asking for just the bare bones minimum they're gonna need. We don't wanna see that as an angel. We wanna make sure you've got enough runway that you're focused on building your business and you're not having to go back out and fundraise in 6 months again. Fundraising takes your eye off the ball. You need to get your money as fast as you can and get busy on your business. The biggest thing on the pitch deck that you've got to include is your exit. An angel investor, a venture capital, they're going to want to get out in 3 or 5 years. So you need to have identified how are you going to get out, and are you going to have a return they want. An angel, it's a huge risk. We're going at pre-revenue most often, very early stage revenue. So we need to know you've got a way for us to get out and get our money back out and make a profit. So, and those things need to be in the pitch deck as you're talking. So, and I'll let Stephen, who has lots of experience actually pitching recently.
So to add to that, one of the things that I see a lot of pitches fail with, so similar to Paige, I was part of 1 Million Cups, which is, I would say, the entry-level pitch competition that you can do here in Dallas. It happens every Wednesday, happens in multiple places around DFW, and they usually have 2 or 3 entrepreneurs that pitch every week. So for a year, no, actually it was longer than that, for like 3 years, I was at every single one of them downtown. And then after that, I went to a group called House of Genius that did a more roundtable approach to pitching. So I've seen about 600 different pitches. I've built, at this point, 30-something decks. The biggest thing that I see people mess up on is the competitor slide, because you get a lot of people it's like, oh, my idea is so fantastic, no one else is doing what I'm doing. Usually, A, that's wrong. Or if it is very technically difficult. So you need to find someone that's doing a part of the business and list them as the competitor so someone knows you at least understand the market. The other half is the incorrect sizing of the fundraise. Numbers to a business owner, especially for business owners that are new to this, first-time founders, they say, what's a responsible number? That's not an investment thesis. Responsible to you is different than responsible to an investor, because what they want to know is, if I give you this money, are you going to be able to take it, develop whatever you're going to develop, and deal with all the unforeseen problems that are going to come up? So learning what other companies similar to you have raised is a very, very important piece of that. Even if you don't have any revenue in your runway, just demonstrating financial knowledge of what your space might look like is key to a lot of people saying, okay, I can take a risk on this. Because that's what you're asking them to do. You're asking them to take a risk on something that may or may not work. And the numbers kind of speak to that. 9 out of 10 startups fail. Like, everyone says, oh, look at all these companies that have been successful. And there are thousands of other ones that did not. So I would say Google is your friend in that case. And especially nowadays, there's a lot of data out there. So for instance, if you don't know what Crunchbase is, get very familiar with Crunchbase if you're pitching to investors at any stage.
So I think that leads me to another point, and you kind of mentioned it in your intro, Stephen, where how much pre-work are you doing sort of for every pitch? How much do you want to know about your investor? So, I mean, for me, I do it sort of no matter what meeting I'm probably having. I'm at least going to LinkedIn. I would view their profile. I might Google, see what else kind of shows up. If I'm going to an organization like an angel place, I would at least kind of see some of those other members to have an idea what they might have invested in before. And I know that I've seen a lot of people who have pitched to me directly, and they clearly have no idea who I am or what I do or why I would be receptive to sort of their product, because they've done sort of zero research ahead of time. But talk about that, about how much do you do, how often do you do it? Do you really need to know that stuff? I mean, how does it help? I don't know that it helps you, other than sort of, just get your sort of, mind right.
Let's start. I think one of and I'll talk specifically in pitching to groups, because that's where I have the most relevant experience, especially recently. So if you're pitching to an angel group, there are probably a dozen or so in Dallas and Texas that are really, I think, lovely. But you need to understand the format. What is the format going to be in the experience? Is there a presentation behind you? Is it a PowerPoint you're going to be clicking through? Do you have 7 minutes and then it goes to Q&A? Are you allowed to bring handouts or not? They each have their own specific format, And so it is in your best interest to follow up with the organizer to understand how are you presented, what's happening beforehand, what's happening after. Is there a networking option that I get to go to ahead of time where your members are going to be gathering for a social hour before or after that I can leverage? May I bring materials, and if so, how many? So the kind of things there are going to be important. I will say the one thing we were talking about beforehand that makes a very poor impression if you're an entrepreneur presenting is if they give you a deadline for slides, honor that deadline. I cannot tell you the number of presentations over the last few years that we've been sitting in and the entrepreneur is being announced to come up and he's like, oh, wait a minute, here, I had changed my slides, here's a jump drive, could you load this one instead? Well, that slows the whole process down. You don't look very prepared as an entrepreneur. It's disruptive and disrespectful to everyone else that's there. So if there's a timeline and a deadline, get your slides in. That is one of the big pieces there. Same thing though, I think the pre-work, in addition to prepping for how it's going to be, is understanding the follow-up process afterwards. So if you're presenting to a group, when do you expect to hear back? What format do they contact you with? Do you have access to their members? How can you best maximize the opportunity to start to engage? Because again, it's the first meeting. So how do you then get a follow-on meeting and start to move into an actual due diligence process with a potential investor? And I'll let Stephen talk about maybe meet the one-on-one meetings.
So I categorize pre-work in two different forms. There is the pre-work that you do for the pitch, which is building your slide deck, doing your research on the market, the offering, and kind of the terms and conditions of and the method that you want to raise money in. So that's another kind of gotcha that some people may or may not say, which is if you are talking to investors and they say, okay, how exactly are you going to take in funds? You need to understand the difference between escrow, you need to understand the difference between convertible debt, like you need to know what instruments and documents you're going to use because a lot of investors have a specific way that they would like to do that deal. And if you give them something that's like really creative, they're going to be like, yeah, I don't know what the language is going to be in here, so I don't really trust this one. Even if they think the idea is great, if they're very favorable to you, they're more likely to say, okay, scrap all your documents, use mine, which then has its own problems. The second part of it is preparing the actual, the process of how you're going to go through the pitch. So it would not be, I wouldn't recommend pitching an investor one-on-one if you haven't done your pitch at least 5 to 6 times in front of some group, right? Whether it's, I would say friends and family, but understand friends and family is just for you to get over nerves of talking to people. They're not going to give you objective advice. And then pitch in public a few times, and then once you've done that, then you're going to be at least ready enough to have the one-on-one conversation. Because a lot of investors listen, and they'll sit and listen, and then they'll say, okay, that's great, we'll get back to you. A few words is probably indication that there was something that you need to adjust, and so that's where you're going to get a lot more advice than money. And that's the adage of, if you ask for money, you're bound to get advice. If you ask for advice, someone will probably surprise you with an offer of money.
So I think that is really good advice there. And so part of that was you need to get an attorney. And so probably at the time you're pitching, ideally you would have done it beforehand so that all of your corporate documents are sorted out already. You know that you can take in money in an appropriate way. You're going to provide some sort of a term sheet and then a set of other related documents after the fact to any investor who says yes, or says, I would like to see what your terms are. You can present them something and they're going to say, yes, I understand what this is. It's typical in this kind of an industry and in this kind of a space, and I would be comfortable signing with this, which might vary. So yes, if you bring something creative, most people can say, I don't know what this is. Yes, yeah. I would have to send it to my lawyer if I was still interested, and then it would be sort of a back and forth, and there'd be some discussion, and then probably would still be a no.
Right.
It's just going to be the likelihood. So part of the goal of sort of getting through this process really is, it's just kind of like a typical sales thing. You're going to have to get through a lot of people and a lot of no's, and so you need to be prepared sort of to do that. But you also need to know sort of if somebody says yes, what am I going to do with it at that point? And if you're giving anybody something that isn't sort of what they might be expecting, that's either going to delay your process or you're going to get just a flat no pretty quickly. Because if you say Paige was talking about Intan, they see at least, 20 opportunities a month. If you got 1 million cups, 2 or 3 every single week, forever.
Yeah.
And there's 5 or 6 of those here in the Metroplex. I've seen hundreds of pitches, and I've gotten, hundreds more decks sort of emailed to me. You really have to set yourself apart sort of from the crowd there somehow, which is part of the, how do you pitch there? And it is really sending me one in the email, I might respond to it, and there would be other people who would as well. I'm not one who says, I have to have a warm introduction from somebody. I'm happy to take a cold thing. Your chance of getting beyond me looking at it is probably not great, just truthfully, it isn't. But everything that you can do that, moves the process down a little bit further, makes it smoother, reduces any sort of friction points along the way, your chances of success are going to be higher. So part of that, so get a lawyer. You can download documents off the internet, and you can get, if you go to Series C or Clerky or one of those, you can get documents, and they're okay. But as soon as somebody says, I'd like to change that, you need to know, okay, they're changing this, how does that affect me?
Right.
Or how does that affect them? So let's talk just a little bit about sort of inside of a pitch, which is a series of slides and some amount of talking that goes along with it. So there's nothing really sort of magic about it. So one of the things that irritates me to no end is when I see sort of numbers that don't match inside of that deck. And I can tell you that I can spot them in less than a second. So if in one place you say, we're going to be doing, $100,000 in revenue at some date, and then later you show me a financial forecast, on a slide that says something other than that, I'm going to pick it out right then, and I'm going to know, okay, you've got errors in here. So what else are you going to make errors about, or what else are you going to be sloppy about? So you want to talk about some just things that you know are issues for you.
I'll give you one that was just from last month's presentation. So we had a company that was pitching to us and said, hey, we're forecasted for 2019, we're going to do $1 million in revenue, and then they had their 3-year forecast or their 5-year. Well, we're in September, so we're like, well, 2019, where are you year to date now? Because, well, we've got 50,000 in revenue, but we've got 1.3 in the pipeline. Like, okay, the pipeline's not closed. So you might want to update your slide, because we're now in September. You're not going to hit $1 million in revenue. There's no way you're going to get through everything you need to close your pipeline there. So let's be realistic, because that does not engender any kind of confidence in your financial ability and your forecasting. So your forecasting needs to be accurate, and you need to be able to know your numbers cold. You need to be able to know those without looking at a slide, without coming back. What is your revenue in the pipeline? How much have you booked? The other thing that you're going to want to look at is in your fundraising, if you're asking for $800,000, $1 million, how much is already committed for? How much is in the bank? How much do you have verbal, solid leads on? But just, being upfront, because we're going to get to that if we're interested in the due diligence. The other 2 things I would say is, as you get through in the pitching cycle, is in terms of NDAs. A lot of times I've seen entrepreneurs who go, hey, I need you to sign an NDA before we'll present to you. You're not going to present to very many angels or venture capitals. They just are not going to sign an NDA. There are too many deals that come through, too many elements of deals. So you come across as a bit of a novice if you're asking people to sign an NDA where you're asking for money. It just doesn't happen right now. Your idea is great, but most of them aren't going to do that. The other thing I think that you need to be careful of when you're raising money is how much money are you taking? What's your minimum entry point to buy in? So, most of the deals you see are going to be either at minimum $25,000 is the commitment, or $50,000 is kind of the area that we see. The challenge gets into if you're taking $1,000 here and $500 here and $2,500 there. Your cap table is a disaster, and it really hurts you when you then later look on if you need a Series A fund. It's too messy, you have too many little individual investors. It just mucks it up from a legal standpoint and a risk standpoint. So it's gonna be hard when you're little and you're trying to get money. Be creative in other ways. Look at, can you take out a line of credit? Can you do credit cards? Can you beg for a loan from somebody? Just what can you do to keep your cap table clean so that you have fewer investors in there? So, I'd say it depends on your level, but I would typically see anywhere from 25 to 50 for the checks.
Mm-hmm. So to follow on with that, to Matt's point, Paige's point, the information mismatch is big. Also information validation. So the way I tend to evaluate a deck just in the eyeballing process, because for where I sit, so my company, as I told Paige earlier, we specialize in moonshots. So we try to implement technology that most people have not taken to market yet, and most of it is on very, very cutting edge. So the people that come to us that want to engage with that are also fundraising. And so it's contingent on them to raise money for them to then pay us. So I vet their decks before they go out and say, we are contracting with my company Plymouth to build this technology. That's part of the proof. So I use kind of a scale of validation. If 90% of the deck can be linked to external validation and third-party sources, I like that deck. If I get to 40% and I'm like, okay, the rest of this is unverifiable and to the point garbage, then that deck is probably going nowhere. And I don't think every investor is that rigorous, but they still use the same formula informally in their head, where they're saying, okay, here's the information that I know, I understand this market, because usually you're pitching to an investor that has some concept of what you're doing. So then they say, okay, how much of what you're telling me in your deck matches to my previous understanding? Because only 10 to maybe 5 to 10% of companies are in completely uncharted waters. Everything else is some version of an existing business. So your investor says, I've made money in marketing, for instance. So if you tell me that I'm going to use, some brand new SEO method, he's going to say, how does that track to my experience? And if he gets halfway down and says, I've never heard of any of this stuff and I don't believe any of it, you're pretty much completely out of luck. And the other part about that is, specifically to Dallas, everyone talks. So if your deck flops in front of any investor that has a decent network, the rest of the network will know. And yes, they will still invite you to pitch because they're probably being nice to whoever made the introduction, but they have already decided that deal's dead. And so it's really important to try to get your best foot forward in the first pitch and do as much red team exercise as possible to vet your own information before going in front of an investor, even if the investor is the nicest person in the world.
So you talked a little bit about technology there, and so this wouldn't be true for all companies, and probably not even most companies, but ones that are doing something that are a little bit different, and certainly today you probably see a lot that are over the last couple of years, a lot of AI, ML which is artificial intelligence or machine learning based platforms or other sort of applications that are either doing something very specific or something very general inside of that space. And so that's one. A couple years ago, there was certainly a lot of blockchain stuff that was out there. There's still a bit of that out there in the world. And then, there's still things, with quantum and space internet and other stuff that are out there that are really on this sort of cutting edge. And if you're a company, then you want to pitch something like that. I mean, how do you find really the right, kind of people? Because I have like this much sort of technical knowledge. I can hear some of these words and I know they probably have some sort of meaning, but exactly, if somebody's pitching me some sort of, really, cool sort of AI algorithm, I have no way of validating that to be true or untrue. And so I'm likely to probably either pass or I will go sort of, hey, ask somebody else that I think might know the answer to that. Can you validate, does this seem right? This seems really good, or seems interesting, or I like the team. But really when you're pitching, so that's how do you dumb that down? I mean, how do you sort of make it so that in 1 minute, you can tell me this thing that you've been spending, 10 years sort of thinking, now it looks pretty good. but there was a couple years in the meantime where it kind of was just stagnant. Stuff was happening, but it's not going anywhere. And so that's what I'm thinking about when I'm thinking about, do I want to invest in this person? Is that, can they hold on long enough? And part of that's, will they get enough money to last way longer than whatever they think it will take? So we'll talk a little bit about pitching to people. So how do you find investors? So if you don't have a big network, where are you going to go? So where's places that people can go practically to practice pitch, or that there will be real investors there?
Yeah. Certainly Google's your friend again. The Dallas community is blessed locally with lots of great groups that are together. I would say, I would start looking at the DEC, Dallas Entrepreneur Center. They have a great website that lists accelerators, incubators, if you want to go that route. So you can start out and actually have a little more hand-holding along the way to even get you ready to pitch for money. And they have different specialties there. So some are technology, some are healthcare, some are general. But that's an area to take a look at. Stephen mentioned the 1 Million Cups as a way to get out and present. There are angel networks, which are membership organizations of which I'm a member. There's a North Texas one, there's a Cowtown one. They even have them for Baylor alumni. So throughout Texas there and across the US. So you can search there. There's the Angel Capital Association, which is a website and lists all the chapters that are there. They all have opportunities to participate. And I would Google and see where else there are that you can go. UTD has some great things that are going on. So there's a lot of entrepreneur centers that are out there that have competitions and abilities to look. So I would say find those networks, ask people. There are resource lists on a lot of the websites that are out there. I know Vela Wood has a great list of resources of when can you go to pitch. And then once you make a pitch to a network, ask them who else they know or can introduce you to. So if you make it through the process with, for instance, the North Texas group of NTAN, can you go to get an introduction to Fort Worth to present to their Cowtown groups? Can you get one to Tyler to go to the Tyler group? And ask for introductions wherever you go. The other thing I would say is ask your service providers, your lawyer, your accountant. If you've got an outside technologist, a lot of them are in the know to pay attention. And then those are my big ones. You're going to have some others, I'm sure.
Yeah. So to add to that, so you're going to do, if you're starting from scratch, you're going to do two types of network development. You're going to develop your professional network, which is a network of founders. That is, so a lot of people think professional network and they say, okay, well my job is X, so I need to find other people like this. Most people working jobs and being entrepreneurs are totally different things. You need to find other people that have either successfully raised money or have successfully bootstrapped a company and have been at least 2 or 3 years in the space. So that's the first part. Be known in the space. At least other people say, hey, that's a founder who's looking at doing this, even if you don't have your idea vetted or you're in the process of bootstrapping, building out the company. The second part is build your investor network based on the referrals you get out of the founder network. Don't show up to investor groups initially with the, I'm gonna raise money. You can show up and say, I would like to learn about this space, but if you show up with the first, if you show up looking hungry, people will avoid you like a plague. So you wanna go, you wanna meet people, you wanna talk to them, even if you're just sharing the thing that you Googled last night, at least you're starting the beginning process of indicating, I'm a person that can speak to this language, and then later that person will hear something and say, oh, I think you should meet this person, and it does spiral that way.
Okay, I'm told we have the 1 minute mark here.
I will add one last point on meeting people. Make sure your LinkedIn game is strong. Your profile is built up well. You're connecting with everyone you meet at events, at networking events, and you are active there.
Yeah, I think that's part of that. So part of this is the time that it takes to sort of develop this network is more than days or weeks. It is definitely months or even potentially a lot longer than that to be able to really get out there. Most people to raise $1 million, it would typically take you 1 year. So that's just sort of a rule of thumb. It may not be, it may be a little bit faster, but that's sort of generally how long it will take. And maybe a little bit less than a year if you're going to do 500,000, but not like 6 months. It might take you 9 months. So building those networks out there, it is a time-consuming process, and it does divert you away from sort of your business. But if you're in a place and you have to raise capital to sort of build your company out, which is a great place to be, don't get me wrong, it is how at least some of us are sort of making our livelihoods. You know, the rewards are worth it, but it is a time-consuming process that you need to be prepared to sort of to do, and it will not be sort of, you know, simple, especially if you're starting, you know, sort of from nowhere, but to get going straight. So I want to thank the panel.